Okay, moving on. Man, we're only on slide 17 and it's been like, what, 45 minutes already? Brutal. Okay, slide 17, compute direct material cost and efficiency variance. And then we're going to do the same thing for labor cost and efficiency variance. Um, and what I think I want to do is just belabor the same points over and over and over again. Okay. So if we think about where we are, we have the actual results, and then we have a static budget. And then here in the middle, we have this flexible budget. And remember, the flexible budget redoes the budget, but assumes that the units that are produced are going to be the exact number of units that we actually produced and sold. Okay? The difference between the flexible budget and the static budget, we were referring to that as the volume variance. And then where we are right now, we said that the difference between actual results and the flexible budget is what we refer to as price or cost variance. Same thing, but the money variance. Okay? And now, the entire difference between actual and flexible is the price variance. And what we are now saying is that the price variance is the function of two different things. It is either the price or cost of our input or the efficiency with how we used that. Okay? And so I'm going to go back to the slides. And so we can talk about direct material first. Okay? And I want to go to, yeah, wow, I can't believe it. We're already at the right, um, we're at the right slide. So they call quantity, they call the second, or I call this the efficiency variance. And the book calls it the quantity variance, but it's the same thing. Okay. And this is price variance. But what I really want to show, okay, is these formulas down here. Okay. The formula for the price variance is the, and I'm just going to write it over here. We're going to do actual price minus the standard price times actual quantity. And then the quantity variance, that formula is the second row, and that will be actual quantity minus standard quantity times standard price. Okay? We can go through all of the algebra, right, between these two, and I really don't want to do that. And we can talk about what this is, and I don't even really want to do that. What I really want to do is just keep it focused on we're looking at the differences between the flexible budget and the actual results. We have two different elements as to why we are different. And it could be that again, if we're thinking about material, the price that we pay for the raw material could have been more or less than what we thought we were going to pay. And then with the efficiency or quantity, what we're saying there is we are using more or less material than we thought we would. Okay? So now let's go back to the slides. And I think maybe we should just go through an example. Okay? So the example here is GMAX produced and sold 3,500 units. Okay. In the production of 3,500 units, it actually used 1,800 pounds. And so maybe I'm going to move my formula. I think this is actual quantity. And then the actual price, so they used 1,800 pounds at $21 per pound. That is actual cost or price. What were we calling it? We called it actual price. Okay, so I'll just use the same. All right. The standard is 1,750. So we said the standard quantity is 1,750. And the standard price is $20. Okay, so in my opinion, I would approach every single question in this portion of the textbook and chapter the same way. I personally would first, hey, there I am down there. I'm going to move myself over here. Okay, I would first just take notes on the formulas. I never remember them, so I'm going to have to go back. And let's just do this. So the first formula for price or cost is actual price minus standard price, actual price minus standard price, times times actual quantity. And then the efficiency variance or the quantity variance, that one is, come on, where's my PowerPoint slides? That would be AQ minus SQ, so actual quantity minus standard quantity, and I think it was times standard price. Standard price. Nice. Okay, those are my two formulas, and then I have the 4 inputs from our PowerPoint slides. Let me see if I can, bear with me. Bear with me. Can I do this? Can I do this? Can I do this? I can. Okay, so let's go back to the question. So, actual price. What happened? Oh, actual price. I wrote it down. The actual price was $21 per unit. The standard price was 20, right? So automatically I'm saying, wow, you know what? The actual price was more than the standard price. So this is guaranteed going to be an unfavorable, right? I spent more than I thought I did. And then the actual quantity, 1,800 pounds. So this total variance is 1,800. Unfavorable because the actual price is lower than the standard price. Then I can do the same thing for efficiency. It's the actual quantity. We used 1,800. Remember, this is not the actual quantity, right? That's the number of units that I created. However, when I'm talking about the material variance, I want to know how much material did we use to produce that many. So actual quantity is 1,800. The standard quantity to produce that many units should have been 1,750. Again, I'm thinking this is unfavorable because my actual quantity is more than my standard quantity. Okay. Then the standard price is $20. All right. So if I do that calculation, I think I'm going to come up with what is 50 times 200. God, can I do that in my head? Is that really 1,000? Did I just do that in my head? Yeah, I think I did. I think I did. Yeah, nice. Just checking my work. Okay, so we're saying, look, the total difference, no, God, this is killing me. I don't want to draw a square. I don't want to draw another square. I want to just move my chalkboard. What we're saying is the total difference between the actual and flexible is 2,800 unfavorable with respect to material. And now we know it is because we spent more than we thought and we ended up using more than we thought. And so the question becomes like, who's responsible for that? Who should we go reach out to? Um, yeah, how do I want to address that? Right? The whole purpose of calculating variances is to really figure out like why were we off and what should we do to correct things moving forward. And so to me, I'm like, man, who should I go speak to? Should I go speak to the purchasing manager and say, hey, listen, you know what? It turns out that um, we spent more. Why did we spend more? Are you using the wrong vendors? Or is the cost of our inputs, right? Is the raw material just more expensive for things that are out of our control? And then with respect to the efficiency variance, it's going to be okay, did we mismanage the use of material? Or was there something about the material that we purchased that was like low quality? So maybe it's the case that we had to pay more, like the price of our raw material went way up. And if we bought the normal material, it would have been even more expensive. So what we did is we purchased some less than ideal material because prices in general are high and we were looking for ways to save money. But since we bought material that's less quality than we typically use, unfortunately we had to use more material than we typically do. Okay? Come on now. I just want to blow this up. Okay? We can do, and again, this is the same thing. Who is responsible for the direct material cost variance, right? So our purchasing manager is going to be saying, I'm not responsible for this unfavorable material quantity variance. You purchase cheap material, so people may have to use more of it. That's exactly what we were just saying. No need to go over the other one, right? Now we can do the same exact thing for labor, okay? Labor, again, the units, and I'm going to move my ugly ass head over there. Actual quantity of labor, 1,700. Actual price, $33 per hour. The standard quantity, 1,750. Number of pounds. Ooh, is that wrong? Yeah, that should be hours, shouldn't it? That should be hours. Another typo. And then standard price. Okay. So again, we can do the same two variances, right? With respect to labor, I'm just going to do the cost variance over here. So again, we're still dealing with this variance. However, this was material, and now I'm just going to do labor over here, right? And I'm just going to cross out all of this just so we're not confused anymore. But the formula for the cost is actual price minus standard price times actual quantity. So let's go get that information. The actual price, and again, man, you're gonna kill me. But let's just go over here. Let's move my fat ass head over there. The actual price of our labor was, what did we say it was? 33. Ooh, nice. 33. The standard price, we thought we would pay 32. So again, man, we're paying more than we thought. And then the actual quantity, the actual number of hours used was 1,700. So my cost variance looks like it's going to be a 1,000 unfavorable, right? The actual price of labor is $1 more than the standard price. Then we can do the efficiency variance for labor or the quantity, and that's going to be actual quantity minus standard quantity times standard price. So the actual number of hours up here, it says that it's 1,700. The standard hours to produce 3,500 units, 1750. Hey, not bad. Looks like it's going to be a favorable because we used 1,700 hours and we thought we should use 1,750. And then the standard price is 32 per. So what is, I definitely can't do that one in my math, in my head, sorry. But the $50 times 32, bear with me. $50 hours times 32 per hour, 1,600. And I'm thinking that is favorable because again, I have actual quantity was less than the standard quantity. So the total price variance for labor is a 600 favorable. I don't know. Maybe it's the case that we paid more, right? We paid more for our labor. We paid $33 an hour instead of 32, and we used less labor. So maybe we paid a little bit more for a slightly more efficient labor force. And maybe we purchased more labor or paid more for our labor per hour because we knew we had deficiency with the material. And so since we had less than ideal quality of material, maybe we went out and got a more skilled workforce. Okay. So material and labor, those could be related. But it looks like, oh, did I do the math? Did I do that wrong? 1,700 unfavorable. How did I get that wrong? And 1,600 favorable. I got the first one wrong. I did 1,800 unfavorable. No, sorry. I did 33 minus 32 times, 1,700. Oops. So this should be 1,700. And then the total should just be 100 unfavorable. And that's what we got. 100 unfavorable for labor. One possible explanation, using high quality paid skilled workers to perform unskilled tasks results in unfavorable rate variance. However, fewer labor hours might be required for the work, resulting in favorable efficiency variance. Fair enough.